How's it going, Chris?
Yeah, it's great. Just off now to have dinner and drinks with the mentors. Yeah, looking forward to it. It's been busy, as always is with Anton. And yeah, looking forward to a good night.
So speaking of mentors,
Yep.
I spoke to Anton the other day about the idea of mentors and the idea of needing a mentor to help with this idea of removing emotion from trading and the importance of remaining emotionless in trading. And he said to speak to you because he said that you were his mentor at Goldman Sachs.
That's right, yeah.
And you helped him
Yep.
very early on with understanding the importance of emotions in trading, or rather the lack thereof.
Absolutely.
So why is it so important?
It's absolutely essential. And with Anton, I first met Anton in, I think it was 2000 when he joined Goldman Sachs. He was there for about 4 or 5 years, of which 2 years he was part of my team. Most of the time he was sitting next to me. And so he was learning from his very, very early learning stage, was sitting next to me and learning, hopefully, from the benefit of my experience. Controlling emotions is absolutely essential to being a successful trader. You need to be able to increase and decrease risk appropriately. You need to make the right decision at the right time and be able to perform the right action, the correct action. That only happens if you're objective. If you allowed your emotions to come into trading, you will end up trading unprofitably, because the natural human nature is to take profits too quickly and to cut losers too late. At the Institute, we teach the benefits of our experience, that we teach you that you need to cut losers quickly and let profits run, which is counterintuitive to human nature. To learn how to control your emotions and be objective at all times only occurs through a process of either trading your own money or trading somebody else's money. You cannot learn this by paper trading. You need to have some skin in the game. And by doing that, you will have the emotions which want you to, when you're losing money or making money, you tend to over-exaggerate. So you'd be too low when you're losing money, too high when you're making money. We need to control that. You only have that roller coaster when you have actually money invested.
So it's safe to say that there's only so much of trading that is academic?
Absolutely.
Yeah.
There are definitely academic parts to trading. Clearly, the idea generation. The idea generation is coming up with ideas for trades and the reasons you need to justify to yourself why you like certain trades or what's your rationale for having certain trades on. That is 50% of trading. The other 50% is risk management. So the risk management is to ensure that you get the best returns from your trades that is possible, which means maximizing your winners and cutting the losing trades. Either getting stopped out. If you get stopped out, you have to remain emotionless, be objective. You hit your target, your stop loss. You hit your stop loss. Exit the position. Cut it as quickly and as effectively as you can.
Can you think of very quick? Can you think of a practical example of this in your career?
Yeah, practical example. Obviously, I've been stopped out numerous occasions, and I know the process that you have to go through. Because anybody puts on a trade they have an idea behind it. So by getting stopped out, you are admitting to yourself that you are wrong. Maybe just in the short term, but you are wrong. And that is very, very difficult to learn. How to do that, once you've done it, that's where you take the emotion out of it, and you've lost the maximum amount of money that you want to lose in a trade. That's when you cut the position. That's your stop loss. Examples for myself where you need to be disciplined and maintain your objectivity. Good example, I just short some telecoms. I got short Deutsche Telekom a long time ago when I was trading at Goldman, and I knew the hedge funds who were buying it from me would be buying it in multiple places, taking the market higher. So rather than watch tick for tick and get squeezed out of the position, I just went for a walk for 10-15 minutes, came back, stock had moved 3% against me and came right back down again, and I maintained my objectivity. That's a lesson for myself.
Right, and it's important.
It's absolutely essential, absolutely essential.
Cathey.
Hello Alan, how are you doing, mate? You all right?
Good.